Meta is the stock everyone is talking about right now, and whenever there are giant moves to the upside or the downside, there is opportunity. In this video, we're going to go over the key opportunity with Meta stock right now, because the opportunity we're being presented only happens every like 5 to 10 years or so. It's very rare. Stick with me. There's opportunity to the upside and the downside, and there's a lot to cover with this situation because it is very rare to see things like this. So let's get right into it. Clearly, Meta stock has had a brutal year so far. It has all-time highs of around $380 each, right? Now it's all the way down to $100 each. It's been a brutal year. They're down around 75% from their highs. And all you see in the media right now is things about Meta falling, right? Which makes sense because they just reported earnings and it was pretty rough. So their stock's down 24% today. Not good at all, especially for a company as big as Meta. Their revenue declined year over year. Their profit dropped by 52% this quarter, which is brutal. And they issued weak guidance. And of course, they got a bunch of downgrades and negative things on Wall Street because of their earnings report. But what we know from the financial media is oftentimes when you see them, or when you see all these news articles talking about one specific stock in one consistent way, normally you want to do the exact opposite. When everyone's talking about Dogecoin to the upside, that was probably the worst time to buy. Whenever you see the media talking about one specific stock in one specific way, you normally want to do the exact opposite. And that's what a lot of these hedge funds are doing. So when we look at Meta stock right now, there's a lot of negative sentiment out there, right? The stock's down 22%, and I can't entirely blame people for looking at Meta because it's down 24%. That's giant, and their earnings were pretty rough. But at the end of the day, the stock is down 75%. Over like the past year or so. It's still nearly a $300 billion company, $250 billion company. That's a very big move. And whether the stock is struggling fundamentally or not, which it is right now, no doubt about that, you don't just see a stock drop by 75% and then like go to zero. Like you always see moves back up along the way. Now, for Meta, for the short term, we're at $100. That's a key level as it is. Not only is it a psychological level, you know, people like tend to be like, all right, I'll buy the stock when it's at $100, or I'll buy the stock when it's at $200, or I'll sell it when it's at $300. Like, it's a psychological level, but it's also been a key support level throughout history. After $100, there's support at $90 and $75. But that's not the key thing I'm watching. What we know with Meta right now is there's a lot of fear, like I've said. But the thing is, you have to ask yourself, what does that mean in terms of opportunity? How can you profit off of this fear? And with fear comes a lot of selling pressure, but it also comes a lot of put buying from people who already own Meta stock, but also for short-term speculators of Meta stock. Let's say we look at the November 18th strike put options, and I'm going to get a little bit advanced right now with options, but even if you don't trade options, stick with me just for a couple minutes. It won't be that complicated. So let's say we look at like the 100 strike put options for Meta for November 18th, right? Yesterday, these options were trading for $125 each. Now they're at $523 each. Put options across the board for Meta has exploded because people who already own the stock are buying it for more protection. And then you also have some of that hype and speculator crowd jumping in and trying to ride the wave now. So here's the thing. Put options are overvalued right now for multiple reasons. One, when you see a stock drop this much and you just see, you know, the hype that we're seeing now with Meta, just in terms of like investor sentiment, that tends to add more of a premium. But we also have implied volatility very high. Check this out. So I'm going to go to a max weekly chart for Meta, and I'm going to make this pretty big. Implied volatility tends to mean revert, means it just bounces back and forth between the average. So let's check this out. If I go to, let's say, a horizontal line, we might say that the average implied volatility for Meta might be like 44%. This red line right here. I'll make it a little bit bigger. Now, what we can see right now is that it normally tops out at around 73% and bottoms out around 20%. What this blue line represents is whether options are expensive or cheap. When the blue line is high, it means options are expensive, right? When the blue line's low, it means options are cheap. We are still very close to that expensive mark. And anytime you see a company report earnings, the options get not expensive, if that makes sense. So we see a lot of people buy options ahead of earnings because more volatility will come. So basically, options get expensive into earnings, but once the stock reports earnings, the implied volatility drops down, just like we could see in the previous earnings report, right where my cursor is. So when a stock already reports earnings, the options get less expensive. So if you are buying options right now in Meta, most likely you're overpaying and they're gonna fall in value. So the way to profit off of that is to sell put options. Selling put options is typically a bullish strategy, but there are ways to make it not really bullish if you do not want bullish exposure to Meta. If you do want bullish exposure to Meta, this is awesome. So I'm looking on the options chain today, and I'm seeing a couple notable things with Meta. You know, there's a lot of volume all across the board, but there are a couple strikes that really stick out to me. The 95 strike puts, the 90 strike puts, and the 85 strike puts for November 18th. There are tens of thousands of contracts being traded on these puts today. And I guarantee you, it is not smart money buying these puts. They are selling these puts. They are out of the money, implied volatility is high, and the stock's down 24%. So to profit off of this opportunity with Meta, you would want to sell put options on the stock because you are getting overpaid for them, and the people who are buying them from you are gambling that Meta stock is going to drop more. So selling put options is the way to go. The thing is that if Meta stock continues to drop, you will be obligated to buy 100 shares of Meta stock. If that happens, you know, like you're getting the stock at a very low price, and from there you can delta hedge, but that's a different strategy for a different video. But there are ways to mitigate your risk. So selling put options is the way to go for sure. To sell put options, you do need collateral though. So basically, for the 90 strike put, you would need $9,000 on the sidelines just to be able to sell that put option, but you will get paid around $170 to do so. In the worst case scenario, you have to buy 100 shares Meta at $90 each, which isn't bad at all. So now to the normal price action part, besides advanced options techniques. With Meta stock right now, you know, there's a lot of talk about, you know, them struggling, right? Which I understand. And the problem is right now, a lot of the bad news is already priced in. Like we spoke about earlier in the video, bad news, like especially like the financial media, they tend to have like the worst timing for stock news. When one stock has a bunch of attention to, like, let's say the upside, normally you want to do the exact opposite, and the same thing for the downside. With Meta stock right now, yes, they're struggling, but if you're looking to short the stock now, after it's down 75% over the past year, you're late. I'm going to say it that simply. You're late if you're trying to short now. Can it fall more? Absolutely. It can definitely fall more, but is it worth the risk? Absolutely not, in my opinion. You're just too late. You know, it's like, it's just not worth the risk, as simple as that. And I know Meta's struggling fundamentally right now, but they're not really doing as bad as you might think. Yeah, their revenue is slowing down, and yeah, their profit's decreasing. But at the end of the day, a lot of the reason for their profit decrease is because they're investing billions and billions and billions of dollars back into the company to hopefully position themselves as a market leader for just the virtual reality / augmented reality / metaverse industry going forward. And there are just some things that you can't change about Meta. For example, if we scroll all the way down to their debt, they have around $26 billion in debt, but in cash and short-term investments, they have nearly $42 billion. So it's like, fundamentally, in terms of like cash and debt, they're not looking too bad at all. Another thing to keep in mind is they're still bringing in, you know, $27.7 billion in revenue compared to the previous quarter of last year. It is down a little bit, which, you know, I understand. It's dropping. It's been a tough year, not only for Meta, but many other stocks out there, and especially the digital advertising industry. But still, you know, it's not like their revenue is dropping that much. Another thing to keep in mind is that throughout everything, throughout the revenue drop, throughout the increased costs with the metaverse, throughout every single little thing you can imagine, that's going wrong with Meta right now, even with the Apple privacy update. At the end of the day, they still profited $4.4 billion this quarter with all of the bad things going on. They still made $4.4 billion in profit this quarter after everything. So there's some people saying Meta stock is going to go out of business, blah, 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 blah. But it's just you're too late if you're trying to open a new short position now. On top of that, their price to sales ratio is lower than it's ever been. So, with this situation for me, I see it as a big opportunity in multiple different ways. One, when you have a stock drop this quickly, it's oversold. Regardless of your fundamental stance on Meta, it's oversold. It's down 75% in a year. And it's a different thing if we're talking about some crappy penny stock that is going to go out of business over the next year or so, but Meta's not going anywhere anytime soon. So it's just, when you see these types of moves, they just tend to bounce back. That's just how it works. Another thing is that a lot of the bad sentiment is already priced in. So for me, I'm really looking to take advantage of Meta by selling put options to people who are trying to bet on Meta starting to go down now after it's already down 75%. Those people are overpaying for the put options and they're just late. So there's a giant opportunity there in that sense. And for those of you who are not comfortable with selling put options, there are other ways to capitalize off of this. One of them being whenever we see big moves like a 24% drop in one day with the stock, there's also opportunity to the upside in certain ways. A similar example that I can give to this is with Netflix. Netflix had a disastrous drop over the past year with all-time highs around $700 and lows this year around $168. Even though they dropped a ton, there were also some very, very significant green days along the way. We can see it dropped a ton on January 21st of 2022. I'll highlight it right here. January 21st of 2022. And yeah, it struggled for a little bit, but a couple days later, it popped back up in a pretty big way. So for the short term with Meta, even though the stock's down a lot, we're also going to see giant moves intraday a lot. So there's opportunity to the upside for just scalping and day trading calls and puts and just shares and short shares. So there's going to be a lot of volatility over the next couple of weeks with Meta, no doubt about that. So there's opportunity in that sense, and there's just a giant opportunity for selling put options and just buying the stock for the long term. Meta's move lately has been one of the craziest moves we've seen in the market in a long time, and with crazy moves comes opportunity. So with everything being said, let me know your thoughts on Meta. There's a bunch of different opinions with it. Some people say it's going to go out of business, and other people are saying, it's an awesome time to buy. There's a lot of varying opinions. Let me know yours in the comments down below. If you're new to the channel, don't forget to subscribe. I post brand new videos every single day, and let's end the week strong.